Just as we heard Ed talking about the stock market record, and yesterday we saw that home prices in March, they kept going up in most state capitals, also at records. The big question now is whether investors are moving in ahead of the RBA first rate cut, or does it show that the rate rise strategy to date simply has not worked? Well, Craig James, of course, is the chief economist with CommSec, and he's going to join us regularly here now on Business Now. Craig, many thanks for your time. What's your sense of that? Because, of course, some investors are going to move in a bit quickly, but if they do go too hard, then the Reserve Bank is going to have the first interest rate cut much further out.
Well, Ross, the complicating factor, of course, is the housing market, where it's basically sort of demand and supply, and there's sort of too much demand, not enough supply out there. A lot of that is due to migration. We need the workers here in Australia, but the catch-22 is we haven't got the supply of homes to be able to meet the needs. So the housing is always driven by supply and demand. It determines price. The only thing that works in economics, and it works certainly in terms of housing, that's what we're seeing at the moment. There is strong sort of demand out there by investors, by owner-occupiers, by migrants, sort of pushing up the prices. But the overall economy continues to slow. We saw that in terms of job ads today. ANZ job ads down in the order of 1%, second decline that we saw in the last 3 months. The Australian economy is slowing. We know inflation's coming down. So we've got all the right script there, but so the hard part is sort of getting those workers, sort of housed for the migrants that we bring in from abroad.
Well, of course, the other sense is that the Reserve Bank now, the first interest rate cut may be sometime next year. And you can even see out of the United States in the past day or so that more economists are now saying that might not be 3 interest rate cuts, as the Federal Reserve has said this year. It may only be 2, that they also might delay. So this is all a bit of a catch-up if the economies are a bit warmer, a bit hotter than maybe those central banks would like.
Yeah, it's something which is going to develop over time. It's our belief that the Australian economy is slowing, the consumer spending is certainly slowing, and that will be represented over the next couple of months. I think the financial markets, particularly the share market, has got that sense that things are slowing down. It's got greater confidence that inflation will come down and the Reserve Bank will start cutting interest rates in the last part of the year. Our tip at the Commonwealth Bank Group is September that the rates will start coming down. I suppose you've also got to remember the demographic challenge out there in terms of the economy, not just our economy, but also the United States and the UK. The baby boomers are moving out of the workforce, and the Gen Ys and Gen Xers aren't filling the jobs. So we have this generational change which is happening, which is complicating the monetary policy decisions for central banks sort of around the world because of the change in terms of demography.
OK, and just one very quick one for you. Given the fact that the stock market is at record levels, but as you point out, the economy is slowing, does it make sense if the economy is slowing, business generally will be making less profit, yet you've got these record share prices out there?
Well, the expectation is, of course, we know that in terms of the share market, it's always a case of expectations. And the expectation in terms of the share market is that inflation will come down, consumer spending will continue to slow as a response to these higher interest rates, that you'll get lower interest rates, and that will provide that spark in the second half of the year and into 2025. And also, so they've got to have a degree of confidence in the Chinese authorities continuing to run their economy at a solid pace. We know that India is starting to fill the void in terms of infrastructure spending as well, and that will all go well in terms of supporting the iron ore price. So it's the outlook, the forward-looking expectations certainly are more positive in terms of financial markets.
Craig James, good to have you on the program. We'll see you a bit later this week. Many thanks for your time.
Thank you.